Chris, what do the charts tell you?
There's this move towards cyclicality, and it's not over. And I think what Mike speaks about, how stocks like Alphabet and Facebook have been so immune to bad news, it broadly speaks to this divide between price action and news. Because the news, the headlines, as we all know, whether it's impeachment or recession or PMIs under 50, aren't very good. But the message of the market is very, very different. We see in every corner of the world, German DAX 52-week high, U.S. industrials 52-week high. Those are pro-growth stories. And I think the surprise is next year, growth is better than people think.
So this is just growth versus value, and you think growth's going to keep winning?
Well, I think more broadly, this is participation getting broader within the market, because all of growth stocks aren't bad. Tech is still quite good. Yeah. But now we have the participation of financials, industrials, some consumer, and importantly, other geographies. A year ago, it was only U.S. tech that was working. Today, you have a lot of other places around the world.
Recently, we've heard people come in and say they like industrials again. You do, too.
Yeah, I think the biggest story in industrials is they're working with the absence of Boeing. So the average industrial stock is acting a lot better than people think. Last week, you had about 70% of industrials make a new 3-month high. Big expansion to new highs reflect broadening exposure. This is a good group. It's a durable move. Don't fade it yet.
It's durable. They said it's adorable.
I think
it's also adorable.
Yeah. I thought you said adorable.
That's
too.
nice, though. That's nice that you would characterize it that way. It gives me a warm feeling. It's an adorable move. It's higher.
It's a cute little rally. Yeah. I do think what you want to see, too, though, is think about it for last December, what we were doing, November, December. The market, in retrospect, was pricing in a pretty sharp slowdown in global growth last year, right? And also that the Fed maybe was offsides with regard to the growth outlook. Right now, the market seems to be saying, well, next year we're probably going to get a pickup, third and fourth quarter, probably the trough for global growth and perhaps corporate earnings. Can you believe the message, I guess, is really the question. And right now, it's kind of persuasive.
But the right now is maybe the key part. We had an analyst who was in earlier who said he doesn't see a recession now for at least 4 to 6 months. That's not a very long lead time. He's looking at next year saying maybe we'll get 5% growth or so in stocks. What do the charts tell you?
Let's just think about it from this perspective. I think the big takeaway here is just don't get too cute. The market spent 24 months in a range. A lot of these groups have just broken out, right? So I think to look for the correction or to fade it this soon is a mistake. When you look at what the message of the charts is, it's saying growth is getting better and people aren't exposed for that. So what is the risk for 2020? I think the market runs away is the risk.
Runs away. When you say that, you're talking north of 20?
I think you're talking 3,350, 3,400, maybe 3,500 level on the S&P. I meant percents, but yeah, but
sure,
I bet
10 to 15.
Yeah,
and let's remember, let's put this in context of a year ago, we had a bear market, right? We had 70% of stocks went down 20% or more. All the cyclicals, semis, autos, banks went down 30 or 40%. So if we put this in context of a new bull market, not one that's 10 years old, but one that's 10 months old, maybe this move to cyclicality makes a lot more sense.
Mike, what are you watching today? We're heading into a weekend, and there's lots of news out there.
There's a lot of news. I mean, first of all, the market has been very firm and steady, unusually steady at the highs, which is a positive. I am looking at the Treasury yields to see if they are going to be telling a different message than they have the previous 2 days, which is they've been coming down. And I don't know if that's a growth issue or if that's just, we overshot with this huge jump, and now I have to settle back in terms of
we heard there were going to be ag buys. We heard the president's not going to sign it. It's partly China, too.
Yeah, it is trading a little bit. It's also trading on the fact that the equity rally stalled out, as Rick Santelli talks about all the time. And bonds look at that and say, OK, I guess we don't have to keep repricing yields higher in the very, very
one of those highs was Disney. That's the only reason the Dow was up that one day, right?
Yeah, I think you can pick it apart a little bit. Yeah. I mean, look, I think it's been steady near the highs is pretty much the lesson. Unusually flat near the highs and refusing excuses to pull back in a more substantial way, at least so far.